It's episode number 3. It's live. Sharif is in the hot seat this week. Let's get going because we have an absolute ton to discuss coming off an absolute monstrous month of November for U.S. stocks across the board. Obviously, we have a couple of interesting facts to, first of all, how are you?
Good, how are you?
Good to see you. It's been a huge month of November. It's been an eventful month of November. On the inflation front, on the market front overall, it was 10 plus for the S&P 500. It was, the NASDAQ, 9 plus for the S&P 500, 9 plus for the Dow as well. Amidst all of that, we lose a legend. We'll start things off on a bit of a somber note, but it's worth acknowledging the passing of Charlie Munger, obviously 99 years old. He was just over a month out from birthday number 100. So the legacy of not only Berkshire Hathaway, but the legacy of Charlie Munger finally comes to an end. But I mean, there's so much you can say, but thoughts here as we get going.
Yeah, a life of wisdom and wit, Brendo, that's what that was. And, an indisputable contribution to Berkshire Hathaway. And there's been no bones about that. And he's been really credited a lot by Warren Buffett himself for really shifting the focus of how they invest, taking these smaller, well-priced companies, but really on the borderline of what would be sound, and paying a bit more for better companies, quality over price, or Brendo. And that was kind of his modus operandi, and he really helped shift Warren in his thinking.
Yeah, and it was in the beginning of this thing. It was Berkshire. I'm speaking of. They were always looking for a deal. They were looking for stocks that were priced too low, that they thought they could get some sort of return on. And he shifted the focus, as you said, to focus on more quality companies at a reasonable price versus anything at a cheap price. So yeah, shout out to Warren Buffett, shout out to Charlie Munger. I mean, I think probably more well known for his Costco participation on the board of Costco, obviously. Was pounding the table on that stock for ever and ever and ever. Yeah. Did very well in it from early days. So, yeah, shout out to Charlie Munger. Just wanted to pay tribute where due. Obviously, Charlie Munger leaving the world and us at 99 years old. So, on that note, let's talk a little bit about the overall market to kick things off. We had such an eventful week, but such an eventful month of November. We start off December on a positive note as well. 5th straight for the Dow, the longest win streak since November of 2021. So here we go into what could possibly be another positive month of December and a Santa Claus rally around the corner. Yeah,
well, I'm definitely I'm okay with one right now. And to be quite honest with you, after that Halloween print when we made lows on that October low, it was tough to be holding your long-term account at those levels. But yeah, it looks like things are bouncing a little bit from here, as you and I were talking about off camera. The SPX making years high, breaking through that 4,600 level that we've been watching for some time. It's been good. My only concern, Brendo, is how long we last with this strength. We know next year a lot of debt is coming due, Brendo, whether it's mortgages, whether it's credit cards. And a lot of the strength has been because the consumer has still been resilient. Yeah. We still have that COVID savings left over. There was a lot of stimulus at the time. People still have credit left over on their credit cards. How long does that last for? Yeah, and that's my concern.
It's a great question. And we'll get into some retail talk here as well, because there's a lot to touch on from the retail space, coming off retail earnings that just come to an end. For the most part, not bad, but we'll discuss how going into next year, going into the holiday season specifically, are retail stocks potentially a buy? And think about that for a second, because I want to show this chart before we do. You mentioned this. There it is. We're recording this on Friday after the close here. So there is the daily candle, and that is the prior high. This candle right here, the prior closing high. So today, put it on the board, as Neil likes to say. It is officially the highest close for the S&P 500 of 2023 on December 1st. So good way to start the month.
Yeah, not a moment too soon. And especially, we haven't really had market breadth. We've had the Mag 7 really lift up the markets at times when they needed lifting this year.
Yeah.
It's really been the 7, maybe a couple of other participants here and there.
Yeah.
But you haven't had that overall market participation. You saw the Russell up 3% today. The S&P now, which encompasses 500 companies from all over, not just the Tech 100. So that's what you want to see. You want to see market breadth and market participation from all sectors. Because I don't know about you, but like, yeah, it's great to invest in these tech names. They move up a bit more than others, but that doesn't really bode well for the other parts of the economy. And so it's good to see some market participation here.
And it's an interesting thought in the sense that, you know, we've been going back and forth on this inflation battle and this inflation conversation for better part of 2.5 years now. And we're getting to a point now where you almost have to ask the question, like we had Powell speaking today on Friday, again, if you're watching on the weekend, or listening on the weekend, Powell on the mic 2 times today, and the market doesn't care. We still closed at the highest level of 2023. So it's almost getting to a point where, does this conversation regarding interest rates, regarding inflation, does it even matter for the overall market? I mean, going into a new year where we are expecting some interest rate cuts to come through, the market is still pricing in some interest rate cuts. At this point, it doesn't seem to be the case. You
know, it's funny because all we heard for the last few months was higher for longer, higher for longer. Now, what's longer? Such a subjective, open term. You know, we saw,
and almost on purpose, though. You know, higher for longer until we figure out when that longer may end.
Yeah, but that's to me a little unusual for them. They like to telegraph what they're going to do. They don't want to surprise the market. They're not in the business of surprising and making money off the arbitrage. That's not what they're doing. So to me, you know, when they say higher for longer, I was expecting, okay, well, maybe we'll see cuts by the end of 2024, mid 2024. But now we're talking about March. Frank and I were talking about yesterday, and he's like, it's really increased the potential rate cut for 25 bips in March. So we'll have to see what happens. But a lot of that has to do probably with interest rates, with the yields as well.
Yeah, I mean, we were having a conversation earlier today just regarding the fact that they continue to come down. It was 3+% for the 10-year and the 30-year to end the week once again. So yeah, the market's not buying this conversation. We had Fed speaker after Fed speaker after Fed speaker all week this week trying to talk the market down. And this was really the last opportunity they're going to get going into the next Fed decision. And I saw today, it's December 13th is the quiet period. So we get another week next week of potential, you know, for them to do that. But then we're right into the quiet period where they can't say anything. I mean, last time we had a couple, you know, say some things, but it didn't affect the market. Let's get into some retail stuff here, because we come to the end of earnings season in general, but retail earnings wrap things up for the most part. Not bad across the board. Obviously, it's holiday shopping season. We get Black Friday, we get Cyber Monday, both, and in general as one, records across the board. This graphic is just pretty impressive, to say the least. And again, this goes back to, you know, what we were just saying, in the sense that we are in an environment where borrowing costs are as high as they have been in decades, but yet 38, what is this, billion? Yeah, $38 billion for Thanksgiving, Black Friday, and Cyber Monday this year. I mean, just impressive, to say the least.
Yeah, absolutely. And even adjusted for inflation, because we know we've seen plenty of that this year, I still think we're making all-time highs. Again, I don't want to sound like a broken record. My concern is, how long can this last? How much more space do you have on your credit card? Can you really take those 30% interest rates for long? How long can you carry that balance for if you're not paying it off every month? And then you see the rise of the buy now, pay later. There's a reason for that. It's, number one, it's either interest-free or really low interest. It helps you break it up over time. You're not going to be paying 30% with a firm. You know, we heard a little bit about their subscription model, where you got to pay a bit of a monthly fee in order to get access to that. I still think that makes sense more for consumers than to pony up 30% or annually compounded on a credit card. Right? So to me, it's just like, not really sure how I feel about that.
I have to admit, I was a part of that number this year. I mean, I don't think we're probably not included in that in Canada, but I was shopping during that time. Certainly not 38 billion worth, but it hurt. Let's just put it that way. So anything on the purchasing list this year for Cyber Monday?
You're going to get me too excited here, Brendo. There's a lot. Well, I got a nice winter coat. So
Okay,
the winter coat's
nice.
out of the way. I needed a winter coat for a while, and it's a long one too, because anybody who knows Canadian winter is you need a good coat. But I quite frankly, I've been putting off big purchases, right? You know, I've been talking a little bit about that, Can-Am thing. That might be kicked down to the road. Yeah, we need better rates, Brendo. If I'm going to pay off this stuff, it's got to be in a better financial.
And the reason I bring it up is because 5.3 billion of that 38 was online shopping specifically. So, I mean, that alone suggests people are just shrugging their shoulders, saying, we're still shopping. Keep going, Fed Chair Powell. We're still shopping. They don't seem to care. Top selling categories included electronics, toys, and games. Once again, online sales growth outpaced in-store sales for probably the 20th year in a row. When was the last time you were actually at a store purchasing something?
Not much. Not much.
It's been a long time.
There's a mall near my house. So I like to peruse. But a lot of the times I'm only looking to see if I actually like it in real life, and then you go and you pull the trigger online because you're going to save a couple of bucks, and that's what you do in this economic environment. But to be honest with you, Brendo, I think the consumer was thrifty the entire year. We heard a lot about, goods being more about the staples rather than the discretionary items, and that may have left a little bit of buying power for the end of the year, especially when you need it around Christmas time.
It's been a positive year, obviously, for retail stocks. The entire market is still positive. I was going to bring up XRT here so we could have a look at just a broad look, but I mean, we asked the question, if you had to point to one or maybe two in the group or the entire group in general, where are you putting your money right now?
Where am I putting my money? That's a great question, Brandon. That's a great question.
In your pocket.
I got to tell you the truth. There's a couple of things that I like right now. I talked to you a little bit about this off camera. I'd like to get into some BYD.
Right.
And there's a reason for that. I feel that the real deal with respect to an old internal combustion engine car maker shifting into a real electric vehicle company in this, and it's kind of like the way they're doing it is the way I think Ford and GM would love to do it. Obviously, they don't have a union issue over there. They don't have to worry about that. That's fine. We get the difference between the economic standards there and the economic standards here. But this didn't happen by accident.
No.
China's been building out their battery facilities for years at a time where it was looked at as uneconomic to do that in North America. And now they're reaping the rewards of that. They're exporting these companies. They're challenging Tesla now in how many EV deliveries they have. I know it's not really retail related, but if you really ask me where to put my money
in a way it is.
Yeah, this is kind of where I like it. I also like Amazon.
Yeah.
But I tell you, we're going to talk about it next. I see that, but the way that they're able to do so many things so well, and the bravery that they have to get into businesses that are not part of their core businesses, you have to admire that. And you don't know where it's going to go. They're getting into processors, and they're making GPUs, tensor processing units. This is not core to their business.
We learned on Friday as well, again, if you're listening or watching on the weekend, we're recording this on Friday. We learned on Friday that they also signed a deal for 3 launches with SpaceX on a pilot program for their own version of a satellite internet type of product. So yeah, I mean, so much to say about Amazon, and as you said, we'll get to that in a sec. But I wanted to show Home Depot here because my last trip to a store was Home Depot in purpose. And yes, I bought a Christmas tree at Home Depot this year. So there you go. They got I think it was $27 or whatever for a tree. No, it was great. I was telling you before we came on one day, I was out of my car, into the store, and back in my car in like 8 minutes round trip.
That's how it's done.
That's how it's done. Yeah. No, it was great. But yeah, I mean, Home Depot stock, I was actually in this, the black line tells the story here. $300 was a huge level going back a couple of years ago, but it's done not a heck of a lot since. We test 330, we come back to 275, and we've been stuck in the middle ever since. So that's Home Depot. Here's that XRT I was just mentioning. We're very, very close here to maybe testing or at least breaking through August highs, which would maybe put, dare I say, $75 back on the radar, which you got to go back to basically the beginning of the year for the retailers. So it's a tough spot. The market's come a long way. These specifically have done better than I think a lot of people have expected. Is there a chance here that we end the year possibly back above summer highs?
Yeah, especially if we get that soft landing. If we don't have that abrupt, stop to consumer spending, if we're able to bring down rates gradually enough so that people don't get blown out and have to pay exorbitant credit card rates, be able to absorb some of that, pay down their debt a little bit slowly. We kind of know that there is going to be other expenses coming to the front here. We know that a lot of mortgages are coming up for renewal that may take away some of the disposable income. A lot's going to factor in here, whether the consumer has the ability to keep propping up these retail names. But with specific to Home Depot, it's interesting with this one because they did so well during the pandemic. People were stuck. They wanted to upgrade their home, and there was really nothing else to spend money on. Then the pandemic comes and ends, and all of a sudden we want to do other things with our money. But hold on, we can't move either because rates are like at 7-something% for 30 years. So we got to stay here.
Yeah.
So I can't move, but I also want a bit of a better home, so to speak. So we're upgrading again.
Yeah.
So it's like they're benefiting, but they're not. A bit of a double look here for Home Depot and some of the other, home improvement names.
Yeah, and we've seen a little bit of bounce back the past couple of days here for banks, specifically in some of the more financial related stocks. Obviously, Home Depot not one of those, but I say that simply because if we start to get signs of, and we have, conditions heading towards more friendly as far as borrowing is concerned into Q1, into Q2 of next year, then you can start making that conversation or having that conversation again of people are going to start investing in their biggest investments, which is their homes once again. I forgot to show this, and I wanted to, there's not a lot of retail in here, I don't think, but I wanted to go back to this. I mean, Costco, obviously, but this is Berkshire's Q3 broken down, basically, what is making them money versus costs in the overall quarter for them. And it's astounding. I mean, insurance is, I wouldn't have actually thought that, but insurance, the biggest portion of their revenue at $24.3 billion, you got to come all the way down to 12%. Or 12% margin, but service and retailing only $9.9 billion for Berkshire Hathaway, but just an absolute monster, obviously. Yeah,
it's funny how it's their biggest moneymaker, but it also ties up the most cash, their insurance business, because they have to do big payouts when a claim is submitted. So it's funny that it's generating a lot of money for them, but that money can't be disposed of or parlayed in a way that you could do it with other industries. So I think it's a bit of a catch-22 on that. And he's made that point to Warren Buffett on occasion. So Berkshire, you know what? It's kind of like an ETF, Brendo. It's like an index fund a little bit.
Heavily weighted towards Apple.
Of course.
As we've all very well know. Shout out to Warren Buffett and Berkshire Hathaway. Amazon, we were going to get into it. Let's get into it. On the shipping side alone, continues to just surpass any estimates they've put out in the past as far as forecasting, what is going to happen, and then some, to a point where over the Thanksgiving, Black Friday, and Cyber Monday weekend, round trip that over 4 days, they actually delivered for the first time ever more than UPS, more than FedEx. A lot of people shopping on Amazon.
Yeah, and this makes me smirk because back in 2016, when they were, and a reporter was touring the Amazon facility, their logistics facility, and they did a whole thing when they said, "Oh, we want to be able to reach the same amount of packages delivered on a daily basis as UPS and FedEx," and they took that report and they showed it to the CEO of FedEx, they showed it to the CEO of UPS, and they said, "What do you think about this?" And they scoffed. They said they're not going to be able to get where we are. Do you know how much money they have to spend to build up these 2,000 facilities that we have over the world? Well, look where they are now. That's why I say Amazon is so brave, diving into businesses that are not core, that they don't know exactly will do well, but somehow they seem to make it work. And I'm not pumping this stock. I don't have any money in this stock. It just is amusing to watch from the sideline.
It's and that's part of the conversation we can have here is if not when for Amazon, because what a move it's been. This is the daily chart, obviously, for Amazon. So I mean, just going back to November Yes, just November, this thing's up 25% and back to, July highs and then some as of the recording of this again, which is Friday. Some highlights from this: 4.8 billion in packages over that 4-day period, as we were talking about. Globally, they're obviously not anywhere near UPS and FedEx, but it has to get to a point, and it has to be said that they just make it so easy. Why not globally?
Well, you said this offhand. I mean, because you live downtown, you have that same day shipping. Apparently, I don't live in Midtown. Well, that was made clear to me today by Sean. But in any event, I thought I lived in Midtown.
Where's Midtown again?
I don't know. Don't get me started on that. But we don't have same day delivering. But I'm so used to having something the next day. When I come home, it's waiting at the concierge for me to pick up. And it makes it easy. There's very little room for buyer's remorse there to change your mind. There's no lineup to wait at to think, well, can I really afford this? I already pulled the trigger, right? Yeah. So I think it's fantastic. My only concern, Brendo, with Amazon is AWS. It grew a little bit more slowly than they liked this year. Now, we heard a lot about companies slowing down spending on cloud in order to save a little bit of money. And we saw Google and we saw Microsoft grow a little bit bigger, quicker than they did this year, especially Google. Obviously the smallest of the three, but taking the most market share away from both. Yeah. So that was my look.
And on that, I mean, Microsoft benefiting heavily from the ChatGPT tie-up this year on the cloud side of things. I was reading actually a couple of nights ago a little bit more detail on that deal that I didn't even realize, but the initial, I think it was 10 billion or something in the neighborhood of 10 billion that they put into or OpenAI was mostly in cloud credit.
Yes.
In Azure.
Yes.
It wasn't even a financially based purchase, and they end up with, something that's turning into, at this point anyways, the leader. We can go down the whole Sam Altman rabbit hole once again, but that seems to be old news at this point. Yeah. But I mean, on that, onward, it would appear for ChatGPT. I mean, I can't even think of one headline I saw this week going back to that Sam Altman thing once again. So it seems like
moving on.
Yeah,
he kind of bought himself time. He's like, look, there's going to be an investigation into my actions. We all know he's got a couple of favorable board members now. Well, likely we're not really nothing's going to be made of that. But he does what he needs to do. He gets the transparency out of there, and then we're back to business as usual. Yeah. Now we obviously knew a little bit about the tension there between what the board wanted and what he wanted. They wanted a slow progression through AI, more safeguards. He's looking to make this into a business. This got to stand on its own 2 feet. But like you said, compute isn't cheap, especially with those expensive GPUs that they're buying hand over fist from Nvidia. Yeah. And as a result of that, they're going to have to get some credits here, cloud compute credits. So that was really interesting to see. I did read that story as well.
Yeah, and he's already come out saying that he's going to invest more into that side of the business and is also working in the background on his own. I was reading today, AI chip or generation of AI chips with a startup of his own. Right. So, let's move on. Lots to get to here. I wanted to mention this just real quick. Ramin, if you want to pull that up. Shopify merchants drive record high, 9.3 billion. Black Friday, Cyber Monday, same old. Shout out to Shopify, Canadian company. Let's talk crypto, shall we? Because it was a pretty impressive week. We get to, what was it? 3-month highs, or at least more than that, even for back above 38,000, then some. We get up to 39,000 on Friday, tag it to the penny, and then get a bit of a pullback. But the march higher continues here for crypto. And, we were making the case for, I think, the guys were talking on the show today a little bit about Uber from the standpoint of it's going into the S&P 500. That might have actually come out. I should look that up. But they were expecting some sort of announcement on Uber after the close on Friday. But if it has, great, it's going into the S&P 500. It's gotten to a point where they almost have to. They're forcing the hand. But the guys were talking on the show today about the simple fact that the move that Uber has had, if you look at the daily chart, indicates all you need to know being included into the S&P 500. The move that Bitcoin has put in on a daily chart, kind of indicating that something good is coming in the form of, as we all know, these ETFs. Who knows when? Exactly. I mean, I was reading a story earlier in the week this week about some hurdles that still are outstanding when it comes to what the SEC may want to look into before they actually give the green light. The Binance mess seemingly has been cleared up for this time. But I mean, all signs pointing towards something coming.
Well, we got an interesting interaction between Fidelity, which we know has an application out for spot ETF for Bitcoin. We got an interesting interaction between them and the SEC. Typically, when they submitted an application, what they would get was a blanket no. Gary Gensler's made his view very clear on how he feels about cryptocurrency. But this time around, it wasn't so blanket, Brenda. It was like they sent them back questions rather than a response to saying, nah. Right? It was like, well, what about this? What about that? Showing some dialogue, showing some reasonableness here. Now, it took the court to force them into that. They didn't do that willingly. Well, you got to go through the courts. You got to go through the courts. My concern is here, who gets the first mover advantage, Brendo? Is it going to be Grayscale? They put in the application first. Is it going to be BlackRock? Everyone's saying BlackRock's going to take the cake here because everyone's going to want to pile into them, and their volume, their market cap for that ETF is going to be the king of the batch, so to speak. So we'll have to see how Fidelity does ARK as well, with their owner Henry. But to build on what you're saying, I think what we got here was two important things. One, with this spot ETF that we're going to get, we know we're going to see more institutional money come in. That's good for the actual industry itself, the cryptocurrency industry. Number two, and I don't want to call anybody a bad actor, but we've cleaned out the more gray area, gray market actors. Sam Bankman-Fried, CZ, others, Celsius have gone by the wayside as well. Kraken. So we've gotten those guys out of the way. Now we've got the more institutional. It feels like Vegas in the 80s, Brendo, when it was the mob.
They're getting rid of the mob.
Exactly. It was a mob dominating the casinos, and all of a sudden we've got the corporations moving in.
Yeah, but is that a good thing? I guess time will tell.
Exactly.
I mean, the whole idea behind this from the beginning was the freedom and the openness and the no regulation behind it. So we'll see. I mean, obviously, there's a lot of shadiness that is happening behind the scenes with Bitcoin. There's the chart if you want to show that, Ramin. We get
a good look.
Right above the last high there, 38,500. We're actually, as we're recording here, above 39,000 once again. So here we go once again for Bitcoin. But yeah, this is what I was saying. Like the march higher continues ahead of obviously what is going to be positive news and something good for the crypto landscape. I mean, I had some housing news on here, but I don't know if we need to spend a lot of time on this. Inflation is high, interest rates are high, housing market is hurting. Does that sum it up?
Yeah,
I feel like that kind of sums it up.
Well, nobody wants to build at these levels. You're not using your own money. You're going and borrowing from Bank A or Bank B to loan you so you can build out and use the equipment and the materials and stuff. And when you're borrowing at elevated rates, that hurts margins. So you're not going to build. We need either to wait until rates come down. That's going to take, obviously, activity from the Bank of Canada or the Fed in the United States case. Or we need government intervention to come in with subsidies, plans, to help alleviate the issue of interest rates. Because millennials can't live in their basement forever, Brendan. They got to go somewhere, right?
No, I mean, you joke, but it's...
Yeah, no, it's serious. So we need more supply. Prices are not going to come down. Clearly, based upon how much people are making right now and the current price of real estate, it's not feasible. It's not tenable. So there's going to have to be intervention either from the money supply issue or from the fiscal side. That's the way I see it. So we'll have to wait and see how we do. But we know that home builders are back to highs. Frank and I were talking about that yesterday. KB Homes, there's others as well.
On the other side of things, I mean, we get some data in this country this week on the GDP front that was less than ideal, and I think a little bit worse than people were expecting. A second quarter in a row negative print for Canada's growth, indicating, I don't want to throw the R word out there, but I mean, a lot of people have been saying this is already a thing, and it's been happening for months. So are we in a recession or are we not in a recession? I'm not going to be the one that actually makes that call. But, after that print, after that GDP print this week in this country, the market was pricing in 100 basis points worth of cuts to come off interest rates in Canada by the end of next year.
Okay,
Right, so they're already pricing in, I think we're at 5 5.25 here, whatever it is, they're already pricing in the fact that we're going back to 4, if not 4.25 by the end of 2024. How that happens, when that happens, remains to be seen, but definitely needed.
The situation in Canada is fundamentally different than one in the United States.
Definitely.
We have 5-year fixed, at which point the interest rate is lapsed and it's renewed based upon what the current rates are. In the States, they got the 30-year fixed. So those who locked it in during the pandemic, they're not going to give that up. But here, we're going to have a lot of mortgages, Brendo, coming due at higher rates in 2024 and 2025.
Yep.
So the look there is, if the Bank of Canada doesn't take it easy a little bit and start cutting rates, a lot of people, number one, are going to have negative net cash flow per month. The amount that they're going to have to pay for those new mortgage rates at the elevated rates is going to exceed their disposable income. And that's a problem. And then we start throwing around the R word there.
Yeah.
The only thing that really has kept us from throwing around the R word, despite the fact that we've got 2 quarters of negative growth, is the job market's been a little bit strong. You can't really have a recession, a real recession, without having some contraction in the job market. People are still making money. They're holding out their jobs. You know, we'll see.
It's interesting you say that. And they've been, let's be honest, they've been good at kind of keeping this under wraps, or not necessarily the front page, as they say, in that there have been a little more job cuts coming through in this country, in the financial sector specifically, over the past couple of weeks specifically. So maybe we're, just at the beginning of something that could be a little bit bigger. This graphic's kind of interesting. This is essentially just summarizing the Fed funds tool. So if you go to the CME Fed funds tool, it'll give you a projection, or what the market essentially thinks is going to happen. And this is going all the way out into long term rates. But halfway through essentially 2026, we're back to 2.5% according to these projections. But the bigger point at the top here, in May, we see a 1/4 point hike. The market has officially priced in the first, cut, I should say. Yeah. The first cut to come as of May of 2024. And last time I was speaking to Frank over at IG, shout out to Frank over at IG. We got to get him on at some point to discuss the macro side of things. How we get there is going to be a really interesting conversation to have as it happens. And I mean, how they go from where we are now to where they need to be. Is it a 1/4 point, a 1/4 point, a 1/4 point, a 1/4 point? Do they go half initially and then see what happens? Because if you remember, on the way up, they went 75, 75, and then half point, quarters, and then, a pause. But on the way back down, they can't really do that. They can't just rug pull this market on the interest rate side of things and then just expect things to not have some sort of fallout. So, I mean, it's an interesting chart to see that, by the end of, not next year, but the year after, the market essentially pricing in 3%.
Well, here's a look. In 01, we didn't get a soft landing. We got a hard landing. In 08, we didn't get a soft landing. We got a hard landing. The only time that I can really look at and say, yeah, we stuck the soft landing was 94, 95. Yeah. And then they incrementally, as you said, brought it down, 1/4 point at a time. It was not that blanket 1% move, 75 bips like they did on the way up. But you know what, Breno, they've really been attacked by many different analysts. And by they, I'm talking about the Fed. They were late to the game to raise rates. They said it was transitory. It wasn't. And now they're being blamed for holding on a little bit too long, saying they raised too fast, too quickly, and they're going to stay elevated for longer than what should be needed. So it's like you're damned if you do, you're damned if you don't.
Part of the job. No?
Yeah.
I mean, I think it's something that comes with the title almost. Sure. If you're going to be the Fed chair, you're going to have to deal with that. We'll see. The point here, we're trying to make, and the point to kind of take home and think about is the market will react regardless in the way that they bring things down. Obviously, if they come half a point right off the top, the market's going to be at all-time highs and then some.
That's the thing.
If the market, if they go a 1/4 point and then a 1/4 point and a 1/4 point, we might see a little bit more of a gradual move back up.
Play the devil's advocate
Please.
Though, and I didn't actually have this in my mind till Frank and I talked yesterday, and he's like, look, there's the law of diminishing returns here. If rates come down too quickly, and he was talking about the 10-year, he was talking about the 5-year, the 2-year, He's like, look, that's really gonna hurt market sentiment. And there's gonna be a point where we come down to a point on yields where the market's not going to react. And talking about the equity markets, it's actually going to be bad for the equity markets because yields are going to be so low.
Yeah.
So that's not something that I digested before, nor is it something that I'm familiar with. But he opined on that yesterday, and I actually want to see if that actually comes to fruition, because I was under the impression, look, let's bring down these rates. Let's make it easier for people to live, not having to pay higher mortgage rates, not having to pay higher credit card rates. That gives more consumer power.
Yep.
And, you know, there is the law of diminishing returns here, according to him.
We get this PCE print this week as well that comes in exactly unchanged, which has been the sticking point. And it's the core side of the PCE that has been the problem over time. Powell keeps pointing to it and saying, see that. Unchanged is not, I don't think it's a good look at this point.
No.
You know, they were expecting 3, comes in 3. I think a lot of people wanted to see that 2 handle for the first time in a few years on any sort of inflation reading.
But there is an inherent part to PCE and CPI that is lagging by almost a year. And it's
true.
the housing component, the shelter component. They are going and taking the rates for homes for rent from almost a year prior. And anybody who did a comparison, Brendo, between the number that they're inputting and the number that apartments.com, for example, is giving you, it's far different. So in reality, are we really at 3%? I mean, I don't know, because shelter component is such a big part of PC, such a big part of CPI, pardon me. So it's kind of hard to tell where we really are.
Yeah, and we went through the gauntlet. No, it's a good point. And we went through the gauntlet of Fed speakers this week. And I mean, I can think just off the top of my head now, at least 2, if not 3 of them specifically pointing to that point, the housing portion, as they want to see that moving before they will talk about cuts.
Yes.
But in the same sense, I think the market's going to force their hand because, and Powell has mentioned this numerous times, if CPI, if actual inflation starts moving down, they can't stay at 5.25 or whatever, you know, the Fed funds rate is if inflation is at 3%. Like that's way too restrictive, and they'll have to adjust accordingly. But the bigger point for the overall market is that level of restrictiveness. They have to maintain that level of restrictiveness. And even at this event today that Powell was speaking at, he was mentioning that simple fact that how restrictive they are may need to be adjusted over time.
I agree. No, I have to agree. I don't really have anything to add to that. Yeah. But that, you know, we need to know what the real rate is. Yeah. Right. And if we don't have the right data, we can't make an assessment as to what the real rate is. So.
All right. Let's talk about AI chips. Nvidia comes out with this. What is this, the 3rd edition at this point of something that they can maybe possibly send to China? So the 2023 H100 shipments, I mean, this is not about China, but the H100 shipments by end customer, obviously dominated by Microsoft and Meta at this point, still spending, as they've said they were going to, massively on these sort of things. But Nvidia in a tricky position, I think. You know, the government doesn't seem to want to let them win at this. So, I mean, this highlighting the fact that there are U.S. buyers for these things, but obviously a huge market is going to be China for them.
Don't you just love government regulation, Brendo? Being the libertarian that I am, I love government regulation. No, I'm kidding, tongue-in-cheek, of course. This is an issue because China is obviously, they were the number 2 customer for Nvidia. About 20 to 30% of their revenue came from China. That is not a small amount. Now, is there a different buyer that can pick up that slack? Well, we saw a little bit about the Middle East. The Saudis stepped in there. The Saudis have a lot of money, and they're looking at building up their AI infrastructure, whether cloud, data centers, what have you. The issue is going to be, you know, whether or not, number 1, they can pick up the slack. Number 2, whether the government comes out with new regulations to kind of embargo these new chips that they're coming out.
And it seems like they're going to.
Yeah, and the Chinese have been quite savvy, taking older technology, refitting it, and coming out with chips. Case in point, Huawei and the Mate 6, what is it called, the Mate 6 Pro or something like that?
Yeah.
And the way that they were able to take the 7-nanometer chip and make it into a 5G. Right, and they're using old the ultraviolet lithography machines that they picked up from ASML. They are savvy, and they're not going to put down their arms. They're not going to lay down. They're going to figure ways around this. So you can put all the embargoes you want, but I think that at the end of the day, they're going to try to maneuver here.
They can't not.
Yeah.
I mean, Nvidia with another massive quarter. Obviously, we talked about that going back a couple of episodes, but Nvidia massive quarter and nothing but opportunity coming out of China. How can they not? I mean, they like I said, they almost have to. I want to keep going. Let's touch on GM real quick.
Yeah.
GM's a disaster. Let's move on. No, I mean, that's the best day. What is that? The best day in 10 years or something like that for 3 years. Sorry, for General Motors. They've gone to having to announce a $10 billion share buyback to boost the stock up?
I don't get this. I really don't get this.
It makes
you
zero sense.
That you're scaling back EV production because you're going to have to fork over more money in wages for the union. And so instead of taking whatever cash you have on hand and trying to invest that into expanding your electric vehicle production, you're going to buy back shares to appease investors for a few months here and there.
Yeah.
To me, it's short-sighted. Maybe I'm not privy to the information that Mary Daly has, or what's her, Mary Barra, pardon me. I forgot, between her and
Freudian slip.
Yeah, right. Mary Barra, look.
Mary Daly's a Fed representative.
Yeah, she's a San Francisco Fed. Marry this, marry that. No. In all seriousness, though, here, Brendo, I didn't think that this money was spent appropriately, especially where they were guiding, and especially how much their revenue got hurt. I don't know exactly the percentage, but they talked a lot about this UAW strike really hurting them, and I didn't think that was a good idea to shift the priorities.
I mean, almost, and I said this on the show, if anyone was watching the live show, it's, look over here, don't look over here.
That's the thing.
Because we have way too many problems that we're trying to solve right now. We haven't heard the end of this Cruise disaster.
No, it's worse.
The autonomous driving. I mean, they've basically wound it up and put it on a shelf somewhere, and we haven't heard anything. Like, we haven't heard a resolution saying this is done, we're writing it off, it's gone, or we're going to work on a solution, come back, bigger, better, stronger down the road to see what happens. But I mean, you and I have had the conversation in the past. When Tesla gets to a point where they have some sort of solution to this autonomous
Oh my God.
driving problem, at this point, the amount of data that Tesla cars collect all over the world, wherever they're driving on any street, anywhere, no one is going to compete with that.
No, and it was Mobileye who was actually doing a lot of the GMs, like, the lane assist or lane change assist, all these little sort of semi-autonomous features on the car. All that data was being licensed by Mobileye to a lot of these companies, and it was Mobileye collecting all that information, not GM. It was proprietary to Mobileye. Unless GM's going to launch their own, the data is going to belong to Mobileye. It's not going to belong to GM, so how can they advance? Look, there was an issue in San Francisco. I get what the first responders' issue was. It acted in an unpredictable way when there's pedestrians. However, there can't be this either we're fully launched or we're not doing anything at all. I mean, there's a reason why this company is trading at 4 times earnings and Tesla's trading at 70.
Yeah.
Right? So I got to tell you, I'm not really impressed with what GM or Ford or Stellantis is doing. And I made this point on the top of the pod. These guys wish that they were transitioning to electric vehicles in the way that BYD was able to. Now, it's not the same environment. I get that. There's regulations here that they don't have to deal with in China. But it can't be this stark of a variance, Brendo.
It feels like they're forcing their hand, or they feel like the market is forcing their hand, and they're having to adjust accordingly. And right now they're not winning. No. Let's transition, because if you saw what happened there was a Tesla mention. Now we're going to talk about Tesla, so let's talk about Tesla. The Cybertruck.
Oh, God.
Comes to life, finally, as of Wednesday of this week. I mean, the event itself was very Elon Musk-esque, let's be honest. There's already a ton of reviews of this thing online. Spend some time on the weekend, go watch some of those reviews, because they're interesting, to say the least. But I have thoughts I want to get to in a second. But Elon Musk obviously had a huge week as well, going back to was it called the Deal Book Conference in New York with Sorkin from CNBC. Said some stuff. Talked about Bob a little bit, Bob Iger from Disney.
Hey, Bob.
Yeah, the Elon crew then follows suit, and this graphic will tell you what I'm talking about here. These are cancellations for Disney Plus after Elon Musk said what he said at that deal book. If you didn't see it, he basically told him to go, F himself. And Disney was the first company to pull their advertising after he made some Elon made some comments that were questionable. Obviously, we don't have to get into that.
Yeah.
But Elon doesn't care.
No, he doesn't.
The world knows this.
Yeah.
Why would Bob Iger go down this road is another question. But it's really interesting to see the Elon crowd following suit.
Oh yeah, his followers are they're gonna follow him to the grave. That's the kind of way I feel. He's got a cult following. People live and die by what this guy says. I've made many mentions of my friend Alfred over the
When are we gonna meet this friend?
We gotta bring Alfred on the pod. I think he'd thrive here, to be honest with you, rather than on the midday. But yeah, he really invests in Elon. He's not investing in Tesla. And I feel a lot of people invest in Elon. They don't invest in Tesla. So when Elon disparages Disney, his followers will follow suit. His proponents will they were going to take action on that. But look, Twitter is not a publicly traded company. Maybe maybe soon.
It will be.
It will be. I tend to agree with you there. I think he spins it off. Yeah, sorry, X.
They're gonna have to pay US Steel a heck of a lot of money to get that symbol.
Yeah.
And he will.
Of course.
He will.
He's going to want that ticker, just like Meta wanted that ticker as well off the Metaverse ETF. Same deal. Look, I want to talk about this Cybertruck.
Yeah, let's do it.
Cybertruck.
I was just trying to grab some pricing here because
I've got it.
That's the
I've got all the prices.
Go for it.
Look, we know that there's going to be 3 models. And obviously, Brendo, my eye is on the Cyber Beast. Who doesn't want a car that goes 0 to 100 kilometers an hour, 60 miles an hour in the States in 2.4 seconds or 2.6 seconds?
Need it.
Yeah.
Definitely need it.
I love it.
Not 1, not 2, but 3 engines in the Cyber Beast model.
Insane.
It's incredible. No, I was mentioning to you today, I was watching some of the reviews that are already online of this thing. And one of the things that stood out to me, which I found really interesting, and he said this, Elon has said this, they're stamping all of the panels that they're putting on this car. So they're putting sheets of metal into these giant stamps, stamping them into the pieces they actually need, and then building the cars to speed up the process, and it's a more efficient way for them to actually manufacture them. What this has done, apparently, though, is there are tiny, tiny imperfections and tiny, tiny differences between each one as to how the metal came out of the stamp.
They're unique.
So yeah, there's the spacing between the panels, the door panels, the trunk, the hood, the whatever, is ever so slightly different on each one.
I know that.
And the other thing that kind of stood out to me was apparently they're very sharp. The actual points on the edge of the cars are very, very sharp. But yeah, let's get to this pricing because it was 4 years ago that we saw this thing for the first time. And side note as well, the sizing apparently has changed.
Oh, really?
They're smaller than the first show model that they came out with. But anyways, yeah, the pricing is the big storyline from today. I mean, depending on the model, up 50% since the original.
Look, every time I look at this car, I like it more. I thought it was hideous the first time I saw it. I did. I'm like, who's going to buy this?
I still think it's hideous.
What year is this? Are we in 2065 yet? Like, I didn't think that there would be a consumer for this. But the more I look at it, the more I like it. And I don't know why. It was kind of like the Model Y, Brendo. I didn't like the Model Y when it first came out.
It grows on you, though.
It grew on me eventually,
That's
right?
very true.
And especially the minimalism with on the interior. I like that.
Yeah.
I know a lot of people don't like that. They want the old car style with all the buttons and gizmos. That's not how you make an EV because it's too heavy, right? You need to minimize. And Tesla clearly knows how to make electric vehicles. Pricing. Sure, in 2019, before we had almost double-digit inflation at one point, Brandon, we were at 9-something%. In 2020, was it 2022 or 2021? We had 9-something.
That's a great question.
Yeah, it was almost 10% at one point.
Had to be 2022. Yeah.
So clearly, he made those statements about $40,000 US, obviously, in a time when we didn't have that cumulative inflation over years. So $60,000, it's US, it's almost 83,000 Canadian we're talking about here for the starting base. The base model is going to be 60,990. It's going to go about 250 miles in range. It's a little slower, Brendo, 0 to 60 in 6.5 seconds. That's not good enough for me.
Two-wheel drive as well, which is...
Yeah.
I mean, I guess they have to have a base model, but I don't think a lot of people are buying that.
Well,
like if you're buying this thing in general, why are you going to buy something that's not at least all-wheel?
Well, that's the thing, right? I mean, and it's to get the Cyber Beast, it's going to cost you 100,000 US.
Yeah.
Minus $10, Brendo. $99,990. Just say 100,000, Elon. Come on. 320 miles of range, though.
It's impressive.
That's a good looker.
It's impressive.
Yeah.
The other side, or talking point, I guess, that I pulled out of some of these reviews I was watching today of the Cybertruck is fingerprints are apparently a problem.
That makes sense.
And this thing is metal, and there's no door handles.
No, there isn't. You're right.
So apparently there's a haptic button on the window frame just above where you would normally have a door handle. You hit the button, it pops out a little bit.
Cool.
But then you have to actually grab the thing to open the door.
So fingerprints galore.
It's up and down both sides, passenger, driver side of the door panel. Fingerprints are a problem on this thing. A lot of people are going to be wrapping for Cybertrucks.
Yeah, I wouldn't mind that. I wouldn't mind seeing some matte black on that bad boy.
I'm sure they're already
great. Look, Brendo, I like the car. The price point, obviously, here in Canada is going to be ridiculous, whether for the all-wheel drive, which, by the way, I didn't mention, is $79,990 US. So 3 models for this bad boy: the base, the all-wheel drive, and then the Cyber Beast. It couldn't be called anything else, Elon. The Cyber Beast, I love it. Yeah, but I think it's going to be out of a lot of people's price ranges, which is okay, because I don't think you can make them en masse in the beginning.
Yeah.
I have a little theory here.
Okay.
Let me get to it.
Give it to me.
We all heard how pessimistic he sounded on the call. Do you recall this? And he said, we dug our own grave, we're not going to be able to scale, this, that, and the other. Is it one of those ones where the classic under-promise, over-perform things? Because he's a bit of a showman.
Yeah.
Right?
Yeah.
So let's see how they do. Clearly, they're losing money on these cars because they're not producing them at scale yet. But he's shown his ability to do it. If he's got to sleep on couches, he will. Now, I sound like an Elon fanboy, but how can you not be? He's produced in the past. He's done what you said he couldn't do. Even Warren Buffett, one of the most critical eyes, says he's a hell of a guy and what he achieved is amazing. To him, though, Tesla's overpriced because you don't really know what this robotaxi is going to be. Right, and that's a lot of the price built in right now is on the potential of this robotaxi.
Yeah.
So
the software side.
There you go.
The software side in general. I mean, I think there's a lot of data that they could use for other things. Let's. I mean, we're getting on time here. Let's maybe wrap this up.
Sure.
We have I don't know. Is 3 times a tradition? It's a thing.
Why not?
That we do at the end of these every single time, and that is this one thing. And it can be any one thing that has benefited you in any way, shape, or form, helped your trading, helped your life, made your life more comfortable, whatever you want. Anything that you're watching, anything that you're listening to, anything that you're happy about in life today. Give it to me.
Look, what's helped me the most is consistency. You're not gonna find success unless you find that consistency first. Unless you're extremely gifted or lucky. So consistency helps. What's helped me, though, practically speaking, is to immerse myself in the financial world. I read, I listen, and I watch all the time, and many different sources. And I want to get as many opinions as possible, even the ones I disagree with, because it gives me an insight into how other people think. So if I could say anything to anybody out there who wants to really excel in the world of finance, practice, and more practice, more immersing.
I love it. No, you have to. You absolutely have to. And I think it's the case for really any profession whatsoever. If you're going to be at the top of your game, and you're going to perform at the top level, you have to be all in. And you have to, as you said, immerse yourself. I'm going to go in a completely other direction.
Go.
I found something this week, in fact, that is really, really cool, and I'm really excited about it.
You're going to make me look bad, aren't you? Yours is going to be so much nicer than my practice.
It's okay. So let me provide some context here.
Go.
I bought a automatic espresso machine for my house a year and a half ago. My wife does not eat dairy.
Okay.
So if you have an espresso machine, obviously you want to make milk-based drinks.
Fair.
Almond cashew milk. I tried it for the first time this week.
Huh?
Go try it. If you like coffees with milk in them, but you don't drink dairy, you have to try almond cashew milk. It is fantastic.
Doesn't clog up the machine, nothing?
No.
Sweet?
It's fantastic. It's creamy. It froths well.
Oh, nice.
It makes fantastic cappuccinos, and it's non-dairy. So there you go.
There you got it, folks.
That's my this one thing. Thank you, my friend. That
Absolutely.
was a lot of fun.
Anything
and
involves talking, Brendo, I'm your guy.
I love it. I love it. That is episode 3 of the Markets Podcast. I hope you enjoyed it. We'll see you again next week.